President Trump gives a 1-month reprieve on auto import levies to Canada and Mexico. Well, this latest twist in the tariff story halted, at least for now, Wall Street's steepest skid in nearly 3 months. But the US dollar was hit hard, falling against a basket of major currencies, with sterling rising to a 4-month high. Fiona Cincotta is Senior Market Analyst at City Index. Fiona, what do you make of the latest moves by the White House? Clearly, auto stocks like Ford and GM benefited, but they're still down this year.
Yes, so whilst we have seen a recovery from those lows, particularly the auto stocks, as you pointed out, they've really rebounded quite nicely yesterday on this latest update. But I think overall, the problem that we're seeing here is the level of uncertainty that's been created. So whilst there's sort of expectations now that, certain trade tariffs are going ahead, there's uncertainty over will they, won't they? Well, we see some rolling back of them. Will Trump walk back certain areas like he has today? Will that mean other areas may be walked back as well? But all of this creates this level of uncertainty that isn't going down so well with businesses and consumers. We've seen consumer confidence and business confidence have fallen quite dramatically in recent weeks and months. And that's obviously going to have some impact. And I think the concern here is that if we start to see those forward-looking data points, which have been quite depressed, actually translate into weaker hard data, that's when we're really going to see some falling out, I think, of the equity markets, and we could see further declines. For now, I think sentiment has probably steadied, but as I said, that there are still more developments likely to come. Beginning of April is going to be another key date to be watching.
Now, what about the dollar? I mean, I mentioned sterling, but the euro also is trading around 4-month highs at the moment too against the greenback. Do you think the dollar will continue to struggle?
Yeah, this sell-off in the dollar exactly is to do with this sort of concerns over the economic outlook for the US, that story of US exceptionalism that we've seen sort of very strong over the past year or so really seems to be coming into question. And that has pulled the dollar sharply lower. I think there is potential for continued weakness in the dollar. The US dollar index at the moment has found a little bit of steadiness. It's trading around technically quite a key level. And if we break below the level that we are at the moment, then that could see further downside. But also, we're also seeing potential for more Federal Reserve rate cuts, particularly if we get those concerns of a US recession growing. Obviously, the Fed has a dual focus, not only on inflation, but also on jobs. So, I think that does mean that jobs data is going to be very much in focus, not only tomorrow, but in the months ahead. Yes, and that's sort of resulted in a strength in other currencies. We've seen the euro has benefited and capitalized from that weaker dollar, but also, been lots of developments in Europe, which have helped the euro rise. Same with the pound. We've seen that capitalize on the weaker dollar. But again, there are, potential for slower rate cuts from the Bank of England, which may be supporting the pound as well.
Well, let's switch to Europe now. And the ECB later today looks set to cut rates. It's probably the last easy rate decision for some time now. And that's partly down to this trade war we find ourselves in, isn't it?
Yes, that's right. 25 basis point rate cut, pretty much a done deal, I think, as far as today is concerned. But the big question, the key focus is going to be on what's next. And I think there is increasing uncertainty regarding the outlook, not only because of these potential looming trade wars with the US, but also given the increased expected spending from Germany, particularly after yesterday we saw that U-turn in their fiscal policy. And I think, that could potentially increase inflationary pressures to come. So the ECB are likely to be cautious, I think, about what comes next. We could potentially see a pause. There have already been hawks on the ECB who have suggested that now might be a time to pause. And I think recent developments maybe support that view too.
Well, you mentioned there the German government looking like they're going to start spending more, but they'll also have to borrow more too. And we've seen a massive sell-off in Eurozone government bonds as well over the last couple of days. What do you make of all these moves in the bond market?
Yeah, we've seen a big reaction, but I think it's a big reaction to big news. This is fiscally potentially a U-turn as far as Germany is concerned. So that does really highlight and is reflected in the reaction that we've seen. As you pointed out, we've seen a massive rise in treasury yields. The Bund has dropped very, very sharply, and that's sort of reflected then in a stronger euro and a rise in German stocks. The DAX was once again at all-time highs. I do think this is an area that the market is going to be watching closely. Obviously, there is a concern always when there's increased borrowing, but if that goes to driving economic growth, then maybe that will be more well received.
That was Fiona Cincotta from City Index. And don't forget, you can get more videos on Reuters.com.